In this video, I'm going to deliver one of the most important mindset masterclasses that I've ever shared with my private trading students. I've been trading profitably for the last 7 years, and in the month of April alone, as you can see on my phone right there, I've earned $155,000 in take-home profit. You can see I'm refreshing on my screen right there, $155,394 in take-home profit. And let me be extremely clear, this is not a promise, a projection, or guarantee that you will make this kind of money or any money at all. Trading involves risk. Most people lose money, and your results will depend on your skill, your discipline, risk management, and experience. What I'm about to share with you are the mindset principles that I personally use to trade with discipline, to control my emotions, and execute my system consistently. If you get value from this video and you want hands-on coaching, mentorship, live trading sessions on a daily basis, and guidance from me and my team inside of my company called Greystone Trading, go ahead and click the link in the description and apply to work with me. Now let's go ahead and dive right into it. What has created this incredible success isn't some magical indicator. It's not some crazy chart setup or anything like that, but it's discipline, real discipline. Not the kind of motivation where you get fired up and excited for a day and then go right back to your old habits, but I'm talking about the kind of discipline that separates people who become profitable and see life-changing success with this system from people who stay stuck in the same cycle for months or even years. Because here's the truth, guys. Most struggling traders, people that have yet to become profitable, do not have a knowledge problem. They don't have a gap in information. They have an execution problem. So most of you already know, you know enough to trade better than you are trading right now. You already know you shouldn't revenge trade. You already know you shouldn't move your stop loss. You already know you shouldn't oversize. You already know that you shouldn't chase. You already know that you shouldn't take random trades outside of your plan. You already know that you should not keep trading when you're angry, when you're frustrated, when you're desperate to make your money back. You know these things. So the question is not, do I know what to do? The real question is, can I actually do what I know? And that's where most traders fail, because knowing what to do and doing it when real money is on the line are two completely different things. It's easy to talk about discipline when the market is closed. It's easy to write down rules on a piece of paper. It's easy to say, tomorrow I'm going to follow my plan. But then the market opens, the candles start moving, you take a loss, then maybe another loss, and then you see a trade that looks like it could make everything back. Your heart rate goes up, your emotions get involved, your ego starts talking, and suddenly all those rules that you promised yourself that you would follow start becoming negotiable. And that's where trading really begins, guys. Right? Not at the setup, not at the entry, not at the chart, but trading really begins in the moment where your emotions want one thing, but your rules require something else. That moment is where you find out who you actually are as a trader, because the market doesn't reward what you know. The market rewards what you execute, right? You aren't paid for how many YouTube videos you watch. You aren't paid for how many indicators you follow. You aren't paid for how many hours you stare at charts. You're paid for the quality of your decisions. And the quality of your decisions is determined by your discipline. Not when trading feels easy, not when you're already green on the day, not when you feel confident, but when it's uncomfortable, when you're down, when you're scared, when you're frustrated, when you want revenge, when you want to move your stop loss, when you want to hit that cancel button to cancel out your stop loss as you see the trade getting closer and closer to stop loss. When you want to take the trade that isn't really there. That's when discipline matters. And if you want to become consistently profitable, you have to understand this deeply, to a very profound level. You don't become profitable because you know more than everyone else. You become profitable because you execute better than most people are willing to execute. Now, One of the reasons, guys, why trading is so difficult is because a lot of smart people come into this game thinking that intelligence is enough. And I want to be very clear with you. Being smart is not enough. In fact, sometimes being smart can work against you because a lot of people have been rewarded their whole lives for being intelligent. Maybe they did well in school. Maybe they built a good career. Maybe they're a business owner. Maybe they're used to solving problems by thinking harder, studying more, analyzing deeper, or working longer. And in most areas of life, that works. But the market doesn't work that way. The market does not care about how smart you are. The market doesn't care how hard you work. The market doesn't care how much you studied last night. The market does not care how badly you need this trade to win. The market does not care about your hopes, your fears, your bills, your dreams, or your ego. The market only cares about one thing. Can you follow a process consistently? That's it. And this is hard for a lot of people to accept because in trading, you can do everything right and still lose. You can wait for the right setup. You can enter the trade properly. You can manage risk correctly. You can follow your stop loss. You can execute the trade exactly according to your plan, and the trade can still lose. The mindset shift is that this is not failure. This is trading. And this is where so many people break psychologically. They think that if they lose, they must have done something wrong. They think if a trade loses, the setup was bad. They think that if they were right, they should have made money. But that is not how trading works. Trading is not about being right every single time. Trading is about following a process that gives you an edge over a series of trades. And your edge does not exist on one trade. Your edge exists over many trades. And if you can't accept that, you will constantly interfere with your own process. You'll try to make every single trade a winning trade. You'll try to avoid every loss. You'll start moving stop losses. You'll start exiting too early. You'll start skipping valid setups because the last trade that you took lost. You'll start adding to losers because you don't want to be wrong. And this is how a person with a good strategy can still lose money. Not because the system doesn't work, but because their execution does not match the system. Their emotions override their rules. Their ego overrides their plan. Their need to be right overrides their need to be consistent. So your job as a trader is not to know what happens next. Your job is not to predict the future perfectly. Your job is not to be right on every trade. Your job is to execute your rules. You execute your edge, you manage your risk, you accept the result, and then you repeat the process. That is what professional trading actually is. It's simple, but it's not easy because everything inside of you will fight against that simplicity. Fear will tell you not to take the next setup. Greed will tell you to hold longer than your plan. Ego will tell you to not take the loss. Frustration will tell you to jump back in and make it back. Impatience will tell you to enter before the setup is actually there. And boredom will tell you to create and force a trade where no valid setup exists. And that is why discipline matters. Real discipline in trading is not about being tough. It's not about gritting your teeth. It's not about trying harder. Real discipline means executing your rules even when every emotion in your body wants to do something else. It means taking the valid setup even when you feel afraid because the last few trades lost. It means cutting the loss when you're hoping and praying it comes back. It means taking profit when your plan says to take profit, even when greed tells you there's more on the table. It means walking away after hitting your daily maximum loss, even when your ego says one more trade, I can make it all back in one profitable trade. It means sitting on your hands when the setup isn't there, even when you're bored and you want action. That is what discipline is. So discipline, guys, is not a feeling. Discipline is not motivation. It's not intensity. Discipline in trading is behavior. It's the act of doing the right thing when doing the wrong thing is emotionally tempting. And every day, the market will give you opportunities to betray yourself. A chance to chase, a chance to overtrade, a chance to move your stop loss, a chance to revenge trade, a chance to oversize, a chance to ignore your rules. And every time that you choose your rules over your emotions, you are becoming a better trader. Every time you choose your emotions over your rules, you are reinforcing the identity of an undisciplined trader. That matters because every decision that you make is either building trust with yourself or destroying trust with yourself. When you follow your plan, even on a losing trade, you build that trust with yourself. When you break your plan, even on a winning trade, you damage trust with yourself. A bad trade that wins is still a bad trade, and a good trade that loses is still a good trade. Most traders, they judge themselves by the outcome. If they make money, they think that they traded well. If they lose money, they think they traded poorly. That is how an amateur trader thinks. Professional traders judge themselves by execution. Did I follow my rules? Did I take the setup that I was supposed to take? Did I manage risk correctly? Did I exit according to plan? Did I remain emotionally neutral? Did I protect my capital? Did I protect my mindset? Those are the questions that actually matter. Because you can't control the outcome of one trade, but what you can control is the quality of your execution. And over time, if the execution is good and the edge is real, the results take care of themselves. Now, the biggest reason that traders struggle with discipline is because they can't accept uncertainty. Now, every single trade that you take is uncertain. You don't know if this specific trade is going to win or lose. You cannot possibly know. No matter how clean, how perfect the setup looks, no matter how confident you feel, no matter how many confirmations line up, you still don't know what's going to happen next. And if you can't accept that uncertainty, you will always be emotionally unstable as a trader because you will keep looking for certainty in a place where certainty does not exist. You'll think, I just need one more confirmation. I just need one more indicator. I just need to be more sure. But the goal is not certainty. The goal is profitability. And how do we get profitability? By probability. Not certainty, but by probability. Right? You're not trading because you know what will happen. You're trading because over a series of trades, your process gives you favorable odds. And so that is completely different. And when you don't understand this, you become obsessed with being right. And the need to be right is one of the most dangerous things that a trader can have. Because if you need it to be right, you will struggle to cut losses. If you need to be right, you will move stop losses. If you need to be right, you will add it to your losers. Instead of letting that stop loss get hit, you will double down. You will take those losses personally. If you need to be right, you will argue with the market. And let me tell you something, the market always wins that argument. The professional trader does not need it to be right on every single trade. The professional trader needs to be consistent over a series of trades. That's the shift. You have to stop thinking trade by trade and start thinking in series. An unprofitable trader says, is this trade going to win? Whereas a profitable trader says, if I execute this edge 100 times with the same discipline and the same risk management, what happens over the series? Because even if you have a strategy that wins 70% of the time, which is roughly what I have, I'm always in the 65 to 72% win rate over any sort of extended period of time. That still means that roughly 30% of my trades lose. And you don't know in advance which trades will be winners and which trades will be losers. So your job is not to pick and choose based on fear. Your job is to execute the process. If the setup meets your criteria, you take it. If it doesn't, you don't. If it wins, great. If it loses, fine. You managed risk. You followed the plan. You move on. That is what thinking in probabilities looks like. And once you truly understand probabilities, trading becomes less emotional. You stop expecting every trade to work. You stop treating losses like a personal attack on your intelligence or on your skill. You stop trying to force the outcome. You stop asking the market to validate you. You simply execute. And that is where real confidence comes from. Real confidence is not, I know this trade is going to win. That's what ego is. Real confidence is, I don't know what will happen on this trade, but I know exactly what I'm going to do either way. That is the trader that you need to become. Now, I want to walk through the most common ways that discipline breaks down. And as I go through these, I want you to be honest with yourself. The first is revenge trading. This is when you take a loss and immediately feel the need to jump back in to get your money back. At that point, you are no longer trading your plan. You're trading your emotions. You're not looking for the best setup. You're looking for relief. You're trying to undo the pain of the loss, and that's dangerous. Because the moment your goal becomes, I need to make it back, you have lost objectivity. The market doesn't owe you your money back. The market doesn't care that you're upset. The market doesn't care that you were green and now you're red. That is your ego talking. And if you listen to that ego, you can turn a manageable red day into a destructive day. So here's the rule. If you notice yourself trading to make money back, stop. Not slow down, not just one more. Stop. Because that version of you is not trading. That version of you is emotional, and emotional traders will always lose. The second way that discipline breaks down is emotional position sizing. This is when your size changes based on how you feel. You have a few winners and you feel invincible, so you size up. You have a few losers and you feel desperate, so you size up to make your losses back faster. You see a trade that looks obvious, so you risk more than your plan allows. That is not confidence. That is a lack of discipline. Your risk should be determined before emotion enters the equation. Not because you feel good, not because you feel bad, not because you want to speed things up. Professional traders control risk first. Amateur traders chase reward first. And the fastest way to destroy a good strategy is to apply inconsistent risk to it. If you trade small on winners and big on losers, you can have a profitable strategy and still lose money. So the rule is simple. Fixed risk, same process. No emotional sizing. And if you're too emotional to use the correct size, you're too emotional to trade. End of story. The third way that discipline breaks down is taking trades that are outside of your plan. The setup is almost there. It kind of looks good. You have a feeling. You don't want to miss the move, so you jump in. And when it loses, you call it bad luck. But it wasn't bad luck. It was a rule violation. Either the setup is there or it's not. If the setup is there, you take it. If the setup isn't there, you do your job and you do nothing. Doing nothing, by the way, is a skill. Not taking a trade, not forcing a trade, is a skill in of itself. For many traders, the biggest improvement they can make is not finding better winners. It's eliminating unnecessary losers, the forced trades, the trades that you take when you're bored, the trades that you take when you're emotional, the low-quality trades. Let me tell you, you do not need to catch every single move in the market. You need to execute your move. The fourth way that discipline breaks down is skipping valid setups over fear. And this one is important because discipline isn't just avoiding bad trades. Discipline is also taking good trades when fear tells you not to. So let's say that you take 3 losses in a row. Your confidence is shaken. Then your setup appears. It meets your rules. It's exactly the kind of trade that you are supposed to take. But because the last few trades lost, you hesitate, you freeze, and you skip it. And of course, that's the one that works. Now you're frustrated because you followed the losses and skipped the winner. This too is a lack of discipline because your job is not to decide whether to take the next trade based on how the last trade felt. Your job is to follow your process. The last trade has nothing to do with the next valid trade, right? And thinking in that way, that the last trade has nothing to do with the next valid trade, is what thinking in probabilities looks like. The 5th way that discipline breaks down is moving stop losses. So this is one of the biggest killers of accounts. You enter a trade, you know where your stop loss is, price starts moving against you, it gets close to your stop loss, and suddenly your brain starts negotiating. Maybe if I just give myself another couple cents, I'll avoid getting stopped out, I'll be able to stay in this trade. Maybe I should just give it a little bit more room. It's probably going to reverse. I don't want to get stopped out right before it goes. So you move the stop loss. And sometimes it works. And when it works, that is actually the worst thing that can happen. Because now you've been rewarded for breaking your rules. But eventually that same habit will punish you. One day you will move the stop loss, then move it again, then hold and hope. And what should have been a small controlled loss becomes a large uncontrolled loss. A stop loss is not a suggestion. A stop loss is the point where your trade idea is invalidated. If you move it because you don't want to accept the loss, you're not managing risk. You're avoiding pain. And avoiding small pain in trading usually creates much larger pain later. Your stop loss is decided before the trade, not during the trade, not emotionally, before. And once it's set, you honor it. The 6th way that discipline breaks down is poor profit taking. Your plan says take profit, but greed says hold for more. So you hold. Then the trade reverses. A green trade becomes break even, or worse, a winner becomes a loser. That doesn't mean that you can't trail or let runners work. But that decision has to be part of a plan before the trade. You can't make it up while you're emotional. You can't make that real-time emotional decisions. You decide your exits when you are calm, before the trade. It is completely predetermined, not when the candles are moving. Because once you are in the trade, fear and greed will both try to influence you. Fear will tell you to exit too early, and greed will tell you to hold too long. Your plan exists to protect you from both greed and fear. The 7th way discipline breaks down, the 7th way that discipline breaks down is overtrading. And a lot of people don't realize this, but overtrading is often just boredom, frustration, or addiction to action. You sit at the screen, nothing is happening, you want to feel productive, you want to feel like a trader, you want to make money, so you start seeing setups that aren't really there. You lower your standards. You manufacture reasons to enter. And now, instead of waiting for your edge, you're donating money to the market because you couldn't sit still. Not trading is sometimes the most profitable trade that you can make. You aren't paid by the click. You aren't paid for activity. You're paid for making high-quality decisions. And sometimes the highest quality decision is to do absolutely nothing. Now, here is a deeper point. Trading reveals who you are. It doesn't create your flaws. It exposes them. If you're impatient in life, you will probably be impatient in trading. You will enter too early. You will exit too early. You'll switch strategies too quickly. If you avoid hard truths in life, you'll probably avoid hard truths in trading. You won't want to admit when you're wrong. You'll hold losing trades. You'll avoid reviewing your mistakes. If you're someone who's addicted to excitement, you'll overtrade. If you need to be right in conversations, you'll struggle to accept losses. The market is a mirror. It reflects back to you exactly where you are emotionally. Not who you wish you were, not who you pretend to be, but who you actually are. And I don't say that to insult you. I say that because trading is an opportunity. Because once you see the pattern, you can change the pattern. But you cannot change what you refuse to see. That's why self-honesty and awareness is so important. You can't improve as a trader while lying to yourself. You can't keep calling emotional trades bad luck. You can't keep calling revenge trading being aggressive. You can't keep calling fear patience. You can't keep calling hesitation being careful. You have to be honest with yourself. Was that trade part of the plan or not? Did I follow my stop loss or not? Did I take profit according to the plan or not? Was I calm or was I emotional? Was I trading my edge or trading my feelings? Most traders don't need more information. They need more honesty. Now, a lot of people will hear this sort of discussion and think, okay, I just need more willpower. But willpower is not the answer. Willpower eventually fails. You can force yourself for a while. You can be disciplined for a few days. You can tell yourself, this week, I'm not going to revenge trade. And maybe you don't, for a little bit. But then the pressure builds. You take a loss, you get frustrated, you see a fast move, you feel like you're missing out, and suddenly your willpower collapses. Because willpower is not a system. Willpower is an unreliable emotional resource. Some days you have it, some days you don't. And if your trading depends on you feeling strong, motivated, focused, or emotionally perfect every single day, you are in trouble. Discipline does not come from trying harder. Discipline comes from structure. Discipline comes from structure that removes choice. And when you remove choice, you remove emotion. Before the market opens, you should already know your plan. What qualifies as a trade? Where is your risk? Where is your stop loss? Where are your profit targets? How much are you willing to lose? How many trades are you allowed to take? At what point are you done for the day? What behavior requires you to stop immediately? These decisions are not to be made in the heat of the moment. The calm version of you needs to create rules for the emotional version of you. That structure. So let's talk about the structure that you need. First, predefined entry rules. You need to know exactly what conditions must be met before you take a trade. Not, it looks good, not, I have a feeling, not, it's probably going to go in this direction, but exact criteria. Either the setup is there or it's not. If it's there, you take it. If it's not there, you do nothing. The second thing is predefined exits. Predetermined targets. Before you enter the trade, you need to know at which point you are wrong. You need to know where you're taking profit. You need to know how the trade will be managed. And if you don't know where you're wrong, you have no business entering the trade. Because without a predetermined invalidation point, you're not trading, you're hoping. And hope is not a risk management strategy. Third is fixed risk per trade. Your risk should not change based on your emotions. Not more because you feel confident, not more because you lost earlier, not more because you want a big day today. The same risk model, the same process, the same discipline. Fourth, a maximum daily loss. This is non-negotiable. You need a line where once you hit it, you're done. Not because you're weak, but because you're a professional. Your daily loss limit exists to protect you from the version of you that shows up when you're emotional. Everyone has that version. That version wants revenge. That version that wants to prove something. The version that thinks that one more trade will fix everything. Your daily loss limit protects you from that person. Fifth, a maximum number of trades daily. This prevents overtrading. It prevents emotional clicking. It prevents the slow drift from disciplined execution into random behavior. Maybe your number is 3 trades. Maybe it's 5. Whatever it is, once you hit your limit, you're done. Even if you see another setup. Because your goal is not to take every single trade. Your goal is to protect execution quality. Sixth, rules for when to stop. You should stop trading if you hit your daily loss limit. You should stop trading if you break one of your rules. You should stop trading if you hit your weekly target on a Monday morning, for example. You should stop trading if you feel angry, desperate, anxious, or tilted. You should stop trading if you're trying to make money back. You should stop trading if you notice yourself chasing. You should stop trading if you no longer feel calm enough to execute. Walking away is not weakness. Walking away is professional. There are days where the best trade you will make is closing your brokerage account for the day. Because bad days happen. Every single trader has them. Days where nothing works. Days where every trade feels difficult. Days where you feel out of sync. Days where your emotions are louder than your logic. The question is not whether those days will happen, because they absolutely will. The question is what you do when they happen. Amateur traders try to fight their way out, whereas professional traders protect their capital and their psychology. And I want you to remember this. Your psychology is part of your trading account. If your mindset is damaged, your money is at risk. Because a tilted trader makes bad decisions. A desperate trader makes bad decisions. An angry trader makes bad decisions. A fearful trader makes bad decisions. So protecting your mental state is not some soft emotional concept. It's risk management. Sometimes the professional decision is to stop. Sometimes the professional decision is to reduce size. Sometimes the professional decision is to walk away, to review, and come back tomorrow. You don't have to make it back today. You don't have to prove anything today. You don't have to force a green day. You need to stay in the game. Capital preservation comes first. Mindset preservation comes with it. Because if you protect your capital and protect your mind, you will always have another opportunity. Okay? And this brings me to one of the most powerful tools that you can use, which is journaling. But not just journaling your numbers. Most traders journal their entry, their exit, their profit, their loss, and that's useful, but it's not enough. You need to journal your emotions, because your emotions are data. After every trade, you should be asking yourself, did I follow my rules completely? What was I feeling before I entered? Was I calm? Was I impatient? Was I afraid? Was I bored? Was I desperate? Was I greedy? Did I hesitate? Did I enter too early? Did I want to move my stop loss? Did I think about exiting early? Did I hold because of my plan or because of greed? Did I exit because of my plan or because of fear? Was this trade planned or emotional? Was I trading the setup or was I trading how I felt? The journal shows where the leaks are. And once you know where the leaks are, you can fix them. Self-awareness is what turns discipline from an idea into a skill. Without self-awareness, you just keep repeating the same mistakes and calling them bad luck. And trading, guys, will ultimately force you to become patient. It forces you to become honest. It forces you to manage your emotions. It forces you to accept uncertainty. It forces you to detach from the outcome. It forces you to follow a process. It forces you to face parts of yourself that most people avoid. Your impatience, your fear, your greed, your ego, your need to be right, your tendency to make excuses. Trading brings all of that to the surface. And if you're willing to look at it honestly, you can grow. Not just as a trader, but as a person. So let me bring this all together. If you want to become profitable, stop obsessing over finding more information and start obsessing over better execution. You need a clear plan. You need defined setups. You need defined risk. You need defined exits. You need a daily loss limit. You need a maximum number of trades. You need rules for when you stop. You need to journal your emotions. You need to think in probabilities. You need to accept losses as being part of the game. You need to protect your mindset, and you need to measure yourself by execution, not by the result of one trade. So here's my challenge to you. Stop asking, what else do I need to learn? And start asking, what do I already know that I am not consistently doing? Because that question will change everything. The gap is not knowledge. The gap is follow-through. And that gap is closed through discipline. Day after day, trade after trade, decision after decision. That's how you become profitable. Not by becoming the person who never feels fear, but by becoming the person who can feel that fear and still follow the plan. And if you commit to that work, trading starts to change. It becomes less chaotic, less emotional, less stressful. You stop needing to be right. You stop chasing. You stop hoping. You stop fearing, and you simply execute. Discipline, the thing about discipline is that it may feel restrictive at first, but eventually, discipline becomes freedom. Freedom from anxiety, freedom from second guessing, freedom from emotional spirals. And that is what I want for you. I don't just want you to know how to trade. I want you to become the person who can actually trade well, the person who can stay calm under pressure, the person who can accept uncertainty, the person who can take a loss without falling apart, the person who can follow the plan when emotions are loud. So as we move forward, remember this. The market doesn't reward the smartest trader. It doesn't reward the most emotional trader. It doesn't reward the trader who needs the money the most. It rewards the trader who can execute a proven process with discipline over time. That's the standard. And that's what we're building here. And professional trading starts with one decision. I will follow my rules whether I feel like it or not. I will accept uncertainty. I will think in probabilities. I will manage risk first. I will stop when I am emotional. I will journal honestly. I will protect my mindset. I will measure myself by execution, and I will become the kind of person who can do what I already know I should do. Because that is the difference. You already know enough to begin changing your results. Now the work is becoming the person who can follow through. That's discipline, and that, ladies and gentlemen, is the path to becoming profitable.